Oklahoma State Extension Livestock Marketing Specialist Derrell Peel is our cattle market analyst this week. U.S. beef and veal exports in February were 3% lower than February 2015. Japan was the largest buyer for the second straight month. South Korea was second. In the U.S., March's cold storage report showed beef in freezers at the end of February down 5% from the previous month. Beef production in February, with an extra day, was 7% higher than February 2015. The latest U.S. drought monitor shows for the first time in 2016, abnormally dry conditions have crept into southern Nebraska. In Oklahoma, nearly a third of the state is now classified in moderate drought. We talked with Derrell Tuesday afternoon about dryness concerns, margins for beef producers, and market movements entering April.
Well, it kind of looks like we've had probably the spring peak in most of the cattle markets, and this is pretty seasonal. In fact, one of the things that's been kind of nice this year is we've seen a little more stability and a little bit more typical seasonal behavior. Both feeder cattle and fed cattle kind of pushed to a spring high. Looks like that's probably in place now. Fed cattle backed off a little bit this past week, and I suspect we're working our way into seasonally larger supplies as we go from now through May and through April and May and on into June.
Some of those larger market moves over the past week or two, that's not necessarily a sign of problems?
I don't think so. Obviously we've had the crop, prospective plantings report, which kind of shook up crop markets. The futures markets have been jumping around a little bit, but I don't think in general, I don't think there's major sort of fundamental concerns within the cattle industry.
For people that are looking for pricing opportunities, what do you think is going to be the outlook here as we go forward?
Well, again, we kind of know what the big picture is here. We are building animal numbers. We actually started herd expansion a bit in 2014, much more aggressively in 2015. There's more feeder cattle on the horizon, and those will begin showing up. They really started probably in February with larger year-over-year placements, and I think for many months now we're likely to see year-over-year increases in placements, and that means more beef production. And so really, we know what the trend is. We're going to erode cattle markets at a relatively measured pace, I think, for the next, not only for the rest of this year, but for the next, in 2017 and on into 2018. So producers have to be aware that there's a long-term trend here that's probably down. I do think we're going to see seasonal patterns, so there's been some opportunities here, and we want to watch for those and kind of go back to looking for those. We hadn't seen them too much in the last couple of years, but and so all in all, I think risk management is going to play a bigger role, given that we know we're kind of on the backside of these high prices, even though they're still going to be pretty good going forward, but they are going to get weaker over time.
Can you shed some light on maybe where margins are right now for feedlots and where they could be for cow-calf producers?
I think that's one of the things that helps us have a little bit of stability in the cattle markets right now. Coming out of all of the big adjustments we did at the end of 2015, we've really kind of realigned prices, and they're going to be what I'm going to call in balance. And in particular, from a feedlot perspective, we've kind of got feeder cattle more back in line with fed cattle. There is an opportunity going forward here for feedlot margins to improve and actually be in the black potentially. They haven't been in the black for many, many months, and 2015 was horrible. So I think that's an improvement. The cow-calf sector, even though prices are considerably down from this time last year, by longer term standards, they're still pretty good. I think cow-calf producers still have an opportunity for decent margins. Obviously, they need to pay a little bit more attention to the cost side of things and really put their focus on managing that to help maintain those margins at as good a level as possible. In between there, we have the stocker sector, which is probably the one getting squeezed the most right now because the markets really are in balance, and with relatively cheap feed costs in the feedlots, there's not a lot of margin right now for stocker operators to put weight on cattle profitably.
Yeah, I'm curious what the affordability of hay and pasture land is down there in your area, Derrell.
Well, we're going to see some adjustments in that, and of course, it depends on kind of what happens going forward, at least in a short-term sense. We do have some dry regions developing, some marginal drought developing in parts of the southern plains, southwest Kansas, the Texas and Oklahoma panhandles, and a much larger dry area that could get worse. So we're watching that. Obviously, we've had some fires and other things too, which doesn't affect the overall land market, but it's kind of indicative of the challenges we have. And so You know, again, as we go forward, you know, in a bigger picture sense, you know, pasture rental rates are going to be under some pressure, knowing that we have somewhat tighter margins in the cattle industry. I think forage supplies are still pretty good. We had a lot of hay going into the winter. We had a fairly mild winter, so overall hay supplies are quite adequate, and we'll keep those prices, you know, very moderate at this point.
As we talk about the rebuilding here going on in 2016, Derrell, the USDA has announced there won't be a July 1 cattle inventory report. What does that mean for an economist?
Well, obviously economists like data, and so we're disappointed at this. You know, I think given that we had a big, very aggressive expansion last year, the timing is very unfortunate in terms of not getting any new information for an entire year in terms of where we are with the herd inventory. Exactly where we are, you know, July 1, the July 1 report typically gave us our first look at what the calf crop for 2016 in this case would be, and we won't get that information. So the industry's, you know, cow-calf producers, given that we have seen a big adjustment in prices over the last several months, are really keen on sort of not overshooting the mark. I think they understand that we're probably not done expanding, but they also understand that we're going to stop at some point. There will be enough expansion, and so the more data we can have to try to anticipate where that stopping point is, the less likely we are to sort of overshoot the mark and really put a lot of pressure on these prices at some point.